Okay, so there's a huge potential trade deal brewing between the US and India. And we're not talking about small changes here. This could be a real game changer, something that could fundamentally rewire major parts of the Indian economy. Let's break down what that really means.
So it all boils down to one massive question, right? If this deal actually happens, who are the biggest winners? We're going to get into the specific sectors and even the companies that are perfectly positioned to ride this wave.
And for this analysis, we're not just guessing, we're actually digging into some fantastic reports from major brokerages. Think ICICI Direct and Motilal Oswal. They've done the homework to map out these potential shifts and point out the key players. So you might be asking, why is this deal such a big deal right now? Well, it's basically three powerful forces all coming together at once. It makes Indian goods way more competitive in the US, it slashes costs for exporters, and it taps into this huge global supply chain shuffle that's happening.
And that big shuffle? It has a name: the China Plus One strategy. You see, global companies are actively trying to avoid putting all their eggs in one basket, the China basket. They're looking for a second manufacturing base, and India is raising its hand to be that plus one. This trade deal, it could pour rocket fuel on that entire trend.
All right, let's get into our first section. We're going to start with the industries that are set to feel the good vibes almost immediately. We're talking about actual, tangible goods.
Just look at this number. For textiles and apparel, which is a massive US import market, tariffs on Indian goods could get slashed all the way down to just 18%. Now, that's down from a pretty punishing 25 to 50%. I mean, that is a colossal advantage overnight.
And what's so cool about this chart is you can see that advantage. At 18%, India all of a sudden becomes much more competitive against a big player like Vietnam. And it gets way, way cheaper than China, which is staring down tariffs as high as 47.5%. That's a perfect recipe for a huge surge in export orders.
And here you can see exactly who's ready to jump on that demand. You've got companies like Gokaldas Exports, which is almost entirely focused on the US market, or Wellspin India, with 60% of its business tied to the US. These are the names that could see their revenue jump anywhere from 10 to 20%. They are in the perfect spot.
And hey, it's not just about t-shirts and towels. The deal is also expected to eventually bring in zero tariffs for other key sectors. We're talking gems and jewelry, which is a $10 billion market in the US, and seafood, which could easily see 10 to 15 growth.
Okay, so we've talked about the stuff you can buy in a store. Let's move beyond that and look at the foundational industries. The B2B sectors that power the entire manufacturing engine.
This is where you see a really powerful chain reaction. For specialty chemicals, it suddenly levels the playing field against China. For auto parts, some very specific exemptions could directly boost revenue by 10%. And for electronics, just getting on the same tariff level as competitors, that just amplifies that China plus one fire we were talking about earlier. And once again, you can pretty much point pin the potential winners across the board. In chemicals, you've got Arty Industries. For auto parts, Bharat Forge. In electronics, Dixon Technologies. And it doesn't even stop there. The pharma industry gets a boost too. Zero tariffs on generics could be a huge help to giants like Sun Pharma and the API specialists like Divi's Labs. Okay, so we've covered physical goods, we've covered the industrial backbone, but believe it or not, the brokerage reports suggest the single biggest winner from all this might be something you can't even touch. It's all about data. So this quote right here really gets to the heart of it. This trade deal isn't just about cutting taxes on goods, it's about technology transfer. To be specific, it makes it much easier to import that high-end US tech like GPUs, which are the absolute essential building blocks for modern AI-powered data centers. And the scale of this opportunity is just staggering. India's data center capacity is projected to double, literally double, to 2,000 megawatts by 2028. And that growth is pretty much all being driven by the massive need for cloud and AI infrastructure. And you know what? We're already seeing the writing on the wall. This deal is what helps unlock huge investments, like Google's planned $6 billion AI hub. A project of that size totally depends on a smooth, easy flow of American technology. Now, if we zoom out to the bigger picture, the analysis suggests this deal could enable a whopping $35 billion in cloud infrastructure investments. Think about the kind of stuff giants like Amazon Web Services build out. Yeah, this is a foundational shift for the country.
And the companies building this future, well, there's some of India's biggest corporate names. Adani Enterprises, Reliance Jio, Bharti Airtel. They're all aggressively expanding their data center footprints to partner with the US tech giants. You could say they're becoming the landlords of India's entire AI future. So we've laid out our winners, but the impact doesn't just stop with them. We also need to look at the ripple effects across the whole economy and, just as important, the risks that could derail this entire thing.
I think this slide does a great job of capturing that domino effect. So while the exporters and the manufacturers benefit directly, a whole secondary ecosystem wins too. Logistics and port operators are going to handle way more volume, banks will be busy financing all that expansion, and you better believe real estate will boom around these new manufacturing hubs.
But, and this is a really big but, we have to be crystal clear here. None of this is guaranteed. The road from a potential deal on paper to actual profits on the ground, well, it's filled with hurdles. Here are really the three main things you need to watch. First, the full agreement actually needs to be signed, and the deadline for that is March 2026. Second, currency risk is a very real thing. Just a 1% appreciation of the rupee could actually shave 2% off the earnings for some of these exporters. And finally, all of this really depends on strong global demand. If there's a worldwide recession, these benefits get muted big time. So that brings us to our final thought-provoking question. You know, India has been carefully putting together all the pieces for a major economic leap. It's got a strong digital backbone, a growing manufacturing base. Is a landmark trade deal with the world's largest economy that final catalyst? The one that truly ignites a decade of unprecedented growth? The answer to that is going to shape the future for every company we've talked about today, and really for the Indian economy as a whole.